All right, ladies and gentlemen, what is cracking? Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Sunday, March 19th at 5:15 p.m. here in Northern California. We're going to jump into these charts really quickly because we just closed a weekly candle 15 minutes ago, and we started a brand new weekly candle right at 5 p.m. California time. It is now 5:15 p.m. California time. And looking at these charts, it seems to me that there's two possibilities here for Bitcoin and, by extension, for the crypto market. The crypto market will basically follow suit with whichever direction Bitcoin decides to go. But it seems to me that there's two possibilities. I'm going to talk about those two possibilities, and one of the possibilities seems more likely than the other. But if anybody is there, I need somebody to give me a shout. I'm going to give just a couple more minutes for a few more people to show up. Somebody give me a shout. Let me know that you're there. If you're watching, let me know that you're there. Drop a line in the comments so that I can hear you. I need to hear you. I need to hear you. Hope everybody had a great week. It's raining out here, but besides the rain, everything is sweet as can be. Bitcoin is now at $28,000. $28,000. The question is it going to break $28,000 and keep going up? Or have we seen the top for now? And is it going to pull back? I'm going to go ahead and jump into the charts here. And we're going to start from the opposite direction that you might expect. We're not going to start with the weekly chart and work our way in. We're going to start with the 1 hour chart and work our way out. Okay, we're going to start with the 1 hour chart and work our way out. All right, I'm going to jump right in here. What we can see here, looking at this 1 hour chart, is that we were forming a bull flag here, and the depth of the bull flag was 2.98%. Hello, Sportably 77, I believe that is. Good to see you. Welcome. Thanks for joining me. So we can see that the depth of this wedge, the depth of this bull flag was 2.98%, which gave us a measured objective of 2.98%, which took us up to 28,194. And as you can see, we've pierced that. We broke all the way up here to $28,194. This was $28,375. So we've broken above $28,000 to $28,375 on the 1 hour. However, what I see on the 1 hour that is interesting is that the RSI topped out over here on March 17th. Right now it's March 19th. So 2 days ago, the RSI topped out and made lower highs, but this high here is still a lower high compared to this high here, whereas the corresponding high in the price and the corresponding high in the price here are clearly higher highs. So when you see a divergence in the RSI that has to do with the highs, that is called bearish divergence. So we're seeing strong bearish divergence on the 1 hour chart, okay? Keep that in mind. That's one data point that we're going to keep in mind. So in terms of the target on the 1 hour, we've reached our target and surpassed our target, but we're seeing bearish divergence in the RSI, and the bearish divergence seems to suggest that a move higher is not quite as likely as a move lower at this point. Now, if we zoom out a little bit to the 4 hour chart, we see a couple of things. First, we see an ascending narrowing wedge, which is a classic bearish pattern. And in addition to that, we see bearish divergence in the RSI, which is that combination, ascending, narrowing wedge, bearish divergence in the RSI. It's pretty much a high percentage shot in terms of charting a breakdown. Okay, so this makes a breakdown pretty probable. However, I will say that we have to be careful concluding that it's certainly going to break down, Because I remember a couple of months ago, Ethereum went through this, and we were trading Ethereum, and we had all of the right signs: bearish divergence in the RSI, RSI oversold, ascending, narrowing wedges, and Ethereum just kept breaking up out of them. So if this is truly a bullish move, we could just as easily break bullish out of this ascending narrowing wedge as we could break bearish out of it. And sometimes when the RSI, when you're seeing bearish divergence in the RSI, if it's a bullish move, all the RSI is doing is kind of cooling off a little bit, and then boom, you get another breakout. So that's what kept happening with the market when we were trading Ethereum in January, is what typically would happen. This typically would be a breakdown, was not happening. So I still think there's a higher possibility of a breakdown and a revisitation of about 24,000. You know, basically my reading of this is we'd kind of get a retest of this line and then break up towards 34,000. I mean, I'm not sure we'll break through it, but something like this and then a break up into that area seems more likely, because what a breakdown like this would do is give the RSI time to break down, and that would give us a more sustainable move up. Let's see what we're doing here. So in order for, so the RSI is the momentum, and what tends to happen is when the momentum is up this high, it's in the overbought arena. If we give the RSI time to cool down and come back and test the bottom, then it can wind up and take off again, and that gives the price more velocity as it takes off again towards the next target. So, of course, you know, we're going to have to watch the RSI here, because what can also happen just as easily is the price can come up and test this, break down, find support there, and then break down further. And as we zoom out, I'm going to show you a scenario that's in the charts right now in which that is a possibility, okay? But once again, we're seeing bearish divergence in the RSI. In other words, the RSI topped out on the 14th of March and has been making lower highs, whereas the price was just getting started on the 14th of March, and it's been making higher highs. So we had a lower high here and a higher high, corresponding lower, and then we had a lower high here and a corresponding higher high. So we've made 2 consecutive lower highs and 2 consecutive higher highs, which means that the bearish divergence is yet to be invalidated. Now, if the RSI does something like this, that invalidates the bearish divergence, because the RSI will have made a higher high and broken above this high here, okay? So if the bullish move is to continue, that's what we're going to need happen. That's what we're going to need to see happen. But for all intents and purposes, the top of this, and I forget how I got this. Whoops. I forget how I got this target. Oh. Okay, I'll figure that out in a minute. But there was a reason why I came up with this target of $29,363. But where did I? Okay, now I'm perplexed because I can't remember where I got that target from. Anyway, this target, 29,363, basically the ascending narrowing wedge leads very naturally, and that's kind of the terminus of this wedge, and so it leads very naturally towards that target. However, the depth in the bullish direction of this target is 19.8%. So if we do get a bullish break out of this wedge, that break could take us all the way up to $34,000, okay? But if we get a bearish break and it breaks down, that could take us all the way down to $24,000. So basically what we're looking at, the next move will either take us to 24,000 or it'll take us to 34,000, okay? So that's what we're looking at. Those are the 2 primary possibilities. Now, if we zoom out on the daily, this is where I get the target. So if we zoom out on the daily, we were in this channel. The depth of the channel is 17.11%. We've broken bullish above the channel already, and that gives us a measured objective of $29,363. So when you put that same target, basically copy and paste that target on the 4-hour chart, it takes us to the natural terminus of the ascending narrowing wedge. So basically, the 4-hour chart and the daily chart agree that this is leading towards 29,363. And for all intents and purposes, there's a good chance that it tops out at that level. Not to mention that on the daily chart, we're moving into the overbought territory, and the RSI is flattening. And so if the RSI turns over here and makes a lower high, then what we will probably see happen is the RSI come up here and turn over, and then somewhat of a downtrend here. Okay? So that's what we're looking at here. But of course, it's definitely possible for the RSI to break out and make a higher high here. And in that situation, the price could break above this line and make a higher high as well. So we're just going to be looking to see which of those it is. But I think the agreement between the 4-hour chart and the daily chart is, pretty, it doesn't seem to be a coincidence to me. These are two data points. Hey, Kevin, thanks for that, bro. Happy to be here. I know it's been a minute since I've done a live video, but I thought let me jump in here and let me talk to my peeps for a minute. All right. This is the chart that I thought was the most interesting because this is the 3-day chart. So I don't look at the 3-day chart very often, but I thought, let me take a look and see if the 3-day chart shows us anything interesting. Well, the first thing the 3-day chart shows me is the depth of this wedge. And this line is dotted simply because it's already been this trend has already been invalidated. We've already broken out of the trend. So solid lines on my chart means the trend is still in process. Dotted lines mean the trend, well, dotted lines can mean two things. Either the trend is already invalidated and over with, or it's a sub-trend within a broader trend. But the primary trend on my charts is always the lines are solid. So we got solid lines here. So we were in this descending wedge, this descending narrowing wedge, and the depth of it was 60.62%. Now this is the breaking point where we broke above that, and that gives us a measured objective of $30,121, which is very similar to $29,306. So it's about $700 difference between the target that the break of this wedge gives us and the target that the break of this channel gives us. So once again, that's another data point that suggests that that is really the direction that we are moving. Now this channel, or this trend that we're in now, is an ascending broadening wedge, which also is a classic bearish pattern. Now watch this. If we go back to the 4-hour chart and we break down from the 4-hour chart based on this ascending narrowing wedge, the measured objective would be $23,602. So I put that line here as support within this channel, which means we could do something like this and then take off. And when we zoom out on the weekly chart, I've got another target of 38,000. And in actuality, if we chart the depth of this descending narrowing wedge that we've broken out of, 146. The measured objective for the break of that wedge is $55,000, right? So when we go back to the 3-day chart, what we could see is we come test this target, come back down to retest this target, and then we can break out from there towards, 38 and then 55,000 if we can break above that. One thing I didn't check to see is where are the moving averages? Okay. Oh, sorry. So let's see. First of all, where's the 200? And the 200 I like to make yellow. Yeah, so the 200 is up here. Well, that's on the 3-day. So yeah, there's going to be a line of resistance there, and then the target above it is 38. So there's some resistance there. Now, of course, on the 3-day, notice that we could keep breaking higher. I mean, and stay in the trend. I mean, this trend, we don't have to come back down and test 24 grand. What if it just keeps breaking higher, right? Well, what I'm seeing on the 3-day is bearish divergence in the RSI. The 3-day topped out on January 19th. And we've been making lower highs ever since. So notice we have a series of higher highs in the price and a series of lower highs in the RSI. Now, the difference between the shorter time frames like the 1-hour chart and the longer time frames like the 3-day or the weekly chart, the difference is when you see bearish divergence in the RSI on a longer time frame chart, it simply takes longer for that divergence to play out, whereas on the shorter term, it takes a shorter amount of time. What's up, Superfood Man? What's up, my brother? Yeah, let's go. Let's go. Superfood Man is in my Patreon. Glad to have you, my brother. So yeah, it'll just take longer to play out, but eventually this plays out. So in other words, what we're already seeing in the RSI on the 3-day is that this bullish move, its days are numbered. At a certain point, it has to break down, and it's got to move downward. Now, the first test, I think we're looking at a breakdown to 24,000 and then another breakout. Now, of course, it could, if it breaks down, when it gets down to 24,000, I'm going to reevaluate. I'm going to look at the RSI. I'm going to look at all of these charts again to see where the RSI is and what it's doing, and evaluate whether we're looking at a breakdown to 16,000, because if we break down bearish out of this trend, the measured objective is 16,500. You see the depth of this trend here. That could take us down to $16,500. And in actuality, it could take us below that. So I'm waiting to see, this whole breakout that we've seen, is it a dead cat bounce or is it a sustainable bullish move? I mean, I have my theories on that. And my theory is that the bottom is not in. But once again, that's just a theory. And by the way, none of this is financial advice. I'm not a financial advisor. I'm not telling you to buy or to sell. And honestly, I won't even tell you what I'm doing. I tell the members of my Patreon that, but I won't tell the world that, simply because I don't want you, doing what I'm doing. And if I'm wrong, you get wrecked. So anyway, what I'm seeing here on the 3-day chart is a potential breakdown to 16,500. But the first step will get this pullback to 24,000 basically, and see where we are once we hit 24,000. And if the RSI, for instance, on the 4-hour chart is at the bottom and oversold, well, that will tell me that we're rearing up to break out again. To me, the severely oversold and the severely overbought positions in the RSI are super important. And for me, what I look for is confluence. If you're overbought on the 1 hour, and you're simultaneously overbought on the 4 hour, and you're simultaneously overbought on the daily chart, those 3 data points are very important indicators of what's coming. Now, when you go to the 3-day and you're overbought on the 3-day too, and then you go to the weekly, but there's a little bit more room on the weekly, you see. So because there's more room on the weekly, you could get something like this, a little dip, and then keep moving higher. So what that indicates to me, what that suggests to me, is that this bullish move potentially is not, well, definitely it's not over. Even if we break all the way down to 16,500 or below, the bullish move is not over. It's just getting started. It hasn't even started, honestly. The bull run, hasn't even begun. Regardless of how low even if we make a lower low in the price, the RSI, may break down on the weekly, but it's going to recover, and it's going to recover with vengeance. And we're going to go somewhere. This Bitcoin price chart is going to take us somewhere. It's going to take the entire altcoin market there as well. So yeah, this is what I'm looking for in the on the 3-day chart. Is I'm looking for, it seems most likely to me that we're going to get that retest of 24,000. Okay. And what would that look like on the daily chart? Basically, if I take this, copy it, and then just paste it on the daily chart. It would look like a breakdown to this level here. Superfood Man says 2 trillion injected for more Fed printing, and Swiss National Bank offered UBS $100 billion in liquidity. Crazy times we are in, indeed, indeed, indeed. So this is part of my thesis as well. Let me see. DXY, that's what we got to look at. We need to look at the US dollar index. Let me start with the weekly. And this is my Elliott wave projection for the DXY. So what I'm expecting is another breakout in the DXY, one more higher high, and then a breakdown. And this, when the DXY tops out and then pulls back and does this ABC correction, this is where the crypto market just explodes and goes absolutely wild. But this will not happen until the Fed gets done printing money. So if the Fed, they say there's at least 2 more interest rate hikes to go. It's just not possible to have a sustained bullish move in the stock market or the crypto market as long as there's more interest rate hikes to come. Not to mention the threat of World War III and all of the geopolitical and macroeconomic forces that are at work is very volatile right now. And that really makes me a bit skeptical of there being any sustained bullish move in the crypto market right now. I just don't see it. Let me see. So now I'll go to the 1-day chart for the DXY. Yeah, see? Oh, this is not good. Okay. So, well, it is good in a sense. This actually makes sense. Okay. So on the daily, we're breaking down out of this trend, which means there's a short-term move here for the DXY to lose about 2%. So when we look at the macro, this is the long-term move. Well, the midterm move, really. But on the daily, there's this short-term move. I wonder what the 3-day would look like. Let me make a copy of this. And then I'm going to make this a 3-day chart. I'm going to delete all of the nonsense on it. Make sure we're in logarithmic scale. Okay, what are we seeing on this 3-day chart? Basically, what I see is I'm looking at, oh yeah, okay, all right. Let me make this solid. Do you see what I see? Clearly, it's a descending narrowing wedge, which is a reversal pattern. So all of the hopium in the atmosphere basically has provided some temporary relief for both the stock market and the crypto market. But whenever this temporary downtrend comes to an end, it's going to start a new uptrend. And so what we could actually see here in the DXY is something like this. Something like that. It can be shorter, who knows. Look at the RSI. You see how the RSI is moving down. Whoops. The RSI is moving down towards the oversold position, just as the price is moving to the bottom of the wedge. And if the RSI moves down to the oversold position and then bounces, oops, sorry, keep doing this. Right? It's going to break out just like the price. Okay? That's what I'm seeing. Yeah, so the RSI is doing the same thing the price is doing, basically. It's more of a channel than a wedge. But when you think about it, like, it's like one of those, you ever see those railroad cars where there's two guys on either side and they pump, and they pump. If you imagine the U.S. economy, well, the world economy, not just the U.S. economy, but on one side of that car, you've got cash, and on the other side of that car, you've got assets. When cash goes down, assets go up, and then assets go down and cash goes up. Then cash goes down and assets go up. That's what moves the economy forward. But cash and assets cannot go up at the same time. So so the DXY, the US dollar index, this is the value of cash that we're looking at. What makes cash go up? Interest rates. What makes assets go up? Quantitative easing. So when assets go up, when interest rates go up, cash increases in value. But then when assets, when the Fed starts to engage in quantitative easing, meaning they start buying assets, basically, it basically artificially pumps assets. Now, if they do quantitative easing while simultaneously decreasing interest rates, the asset market just goes crazy. The markets just absolutely love it. Right now, they're doing some inadvertent quantitative easing. It's not real quantitative easing, but basically, how are they doing this? Instead of loaning these banks money, they're buying assets from them at a certain price point, and then when the banks raise their money back, they can buy those assets back from the Fed. So it's really a form of a loan, but the result of it has been the impression that the Fed is engaging in quantitative easing, which markets absolutely love. So I think that's causing a temporary decline in the U.S. dollar, and it's also causing the crypto market. Look what the crypto market is just loving it. So do so do all other assets. I mean, let's look at. I haven't looked at the stock market yet. Here, this chart, you can see I got all of them together. The let's see, let me move myself out of the way here so we can see all three of them. The Dow Jones, the DJI, and then we've got the S&P 500 here, and then we've got the NASDAQ. We put them all three together. Now, I haven't looked at this chart in a minute. This is interesting. The DJI has broken down. You know what? Let's make a new chart on the fly here. What I'm going to do is I'm going to make a copy DJI. I'm going to erase all this junk here. And then I'm going to DJI. The Dow Jones Industrial Average. All right, now, this is interesting. Look at this. The DJI has broken down. Wow. Why has the DJI broken down? Look how steep this ascending narrowing wedge is. And we have a bearish break beneath it. Broke down, retested it, and got rejected. What in the world? So then where is the DJI going? Anybody know what's going on with the DJI and why it's breaking down like this? I did not expect to see that. .1%. Wow. So here we can see this is the 10th of March. From the 10th of March to its top, Bitcoin made 46%. Where's the 10th of March? Well, I mean, just from this move here, we've lost 6%. I don't get it. Okay, I'm going to have to look into that. Nobody knows what that's all about? This is the chart I was looking for. All right, going back to this chart. Yeah, we're seeing a clear uptrend, for instance, in the NASDAQ. Last Friday, stock market dropped 384 points. Do you know why? How is crypto breaking out? See, that just adds one more data. See, that makes sense to me. That the stock markets would break down and the crypto market would break down makes sense to me. What does not make sense to me is the breakout, the crypto breakout right now. Right. SVB and Signature Bank failures. That makes sense. That it would cause a breakdown in the stock and crypto markets. That to me is just kind of another data point that suggests that this move up in the crypto market is not sustainable. At any rate, anywho, now you can see my lovely face again. Fidelity is offering Fidelity crypto? Really? .401k access. Vanguard could be next. All retail investors coming in to invest. XRP will be the #1 coin. You know, you might be right, Timothy. See, the whole thing about institutional money coming in, flowing in, to me, that indicates that the bottom is not in. That's another data point that indicates to me that we haven't seen the bottom yet. Because this is so number one, I just look at the charts, right? So when I look at the charts, here's what I see. A move down to 24K and then a move up to 30 to 34K, right? I mean, a move up to 30K, then a move down to 24K, and then move up towards 34K. That's what I see when I look at the charts. So when I look at the charts and I see this, bearish divergence in the RSI, sending a narrowing wedge, we could break down and then we could break out up towards, like when I see this in the charts, it doesn't really matter to me what I hear in macroeconomics, because the charts already know the market already knows. It's not like I'm going to discover some macroeconomic detail that the market doesn't know about yet, right? The market already knows about it. This is how I called the Luna crash 2 weeks before Luna crashed. And I charted it, and we shorted it in my group. I put the chart on my Patreon and said, I called a 70 to 80% pullback for Luna at $98. So we shorted it at $98, and the plan was to take profit at $15. Well, yeah, we did take profit at $15, which we shouldn't have done because it went to zero. I did not foresee it going to zero, but I knew it had to crash, and the reason it had to crash was because it was in a huge ascending narrowing wedge, and it was coming to the end of that ascending narrowing wedge, and there was huge bearish divergence in the RSI that went back months. So it was like, this has to crash. So what I'm saying is, I don't need to know the fundamentals when the chart is screaming something, right? But I like to ponder the fundamentals because I like to reflect upon macroeconomic factors and geopolitical factors as well. Like, what happens if World War III breaks out? You know, what happens to the crypto market, the stock market? There's going to be a flash crash. I mean, it's going to crash like crazy. Everything should crash. But this is the piece of the puzzle that gives me pause. Here at this was the bottom of the crypto market, 15,583, something like that, right? Look at the volume on that day. I mean, on the day we hit the very bottom, there was no money. Now, from that bottom, we're up 81%. And you're telling me that institutional money is now getting ready to come flowing in. So to me, it's like, why would institutional money want to come flowing into Bitcoin at an 81% markup from the bottom? You know, I just don't get that. I don't get it. And so with that being said, to me, another crash is in order of some sort. But I hold that kind of in the back of my mind, and I'm not calling that because I don't see that in the charts. That just makes sense to me, but I just don't see that in the charts. The charts don't show that to me at this point. Once we broke bullish above this trend, what I expected us to do, where is it? What I expected us to do over here was to hit the top of this trend line and then bounce around in here a couple more times until the big money bought it, and then we go flying, right? And I expected like huge green candles down here at the bottom, but it just don't make sense. It just don't make sense. I mean, think about it. Like, okay, so here was the huge volume way over here, and then we make another bottom and there's not much volume at all, you know? I don't know, guys. I don't know. They know that the dollar crash is coming. I just don't. I mean, yes, the dollar crash is coming, but how can the dollar crash come when we know they're still going to raise interest rates at least 2 more times? Like, I mean, this is what I see on the short term with the dollar. And then This is my longer term, I mean, yes, the dollar crash is coming, but I just don't, I think it's the dollar crash is going to take a while to get there. It's not imminent unless there's something I don't know. Which is very, very possible. They're shifting investments from stocks to crypto. Yeah, once again, I just don't get it. It doesn't make sense to me. But it's happening. And the key is to understand that, when you're looking at markets, you don't have to understand why it's happening. You just got to know that it's happening. Yeah, crazy times. That's exactly right, Superfood Man. Crazy times, bro. We just deal with the fact that it's happening. And so the way I deal with the fact that it's happening is I just look at the charts and try to forget everything else and just try, because what happens is when I become aware of macroeconomic factors and even geopolitical factors, that begins to influence what I see in the charts. I go to the charts expecting to see what I think. And the charts are not telling me what I think. And so, do I trust what I think or do I trust the charts? And the answer is, well, I got to trust the charts because I subscribe to the school of technical analysis. That's why I do this. And if there's anything that the school of technical analysis teaches, it's that the fundamentals are already present in the technicals. What that means is that the folks who are moving the market, the knowledge of the fundamentals of the market are known by the aggregate of individuals that are moving the markets. So when you see the chart, you are seeing the result of that knowledge, that market knowledge. It's reflected in the chart already. And so, with that being said, what are you going to do? What are you going to do? Buy the rumor, sell the news, right? Sell the hype. Buy the fear and sell the hype, right? All right, folks. With so much FUD out there, right? With so much loving in the LBC, it's kind of hard being me, Snoop D-O-double-D. It's kind of hard being Snoop D-O-double-G. Sorry, I messed that one up. But I somehow, some way, all right, guys, we've been at it for long enough, no? Thank you all for joining me here today. Appreciate it very much. Remember, this is not financial advice. This is just kind of what I see here. And hope it helped. If it did help, if you would do me a favor and hit that like button, hit that subscribe button, leave me a comment letting me know what you think. Appreciate Superfood Man, all the members of my Patreon community, and appreciate all of the rest of you. James, if you're the James that I think you are, you are the James who's in my Patreon community as well. I appreciate you. Sportabilly77, thank you so much. Timothy Claiborne, thank you so much. Appreciate all of you who joined me here. May the Lord bless you and keep you. May he prosper you in every way. And all of the resources that I provide on this channel and in my Patreon community are designed to empower you to sleep in peace every night, wake in joy every morning, and walk in love every day. And it's my prayer that you do just that. With that being said, this is Cryptogenic signing out.